Thank you for joining us for another episode of the Dealmaker Series. Today, we are joined by Director of Business Development at Willis Towers Watson, Kevin Langley. Kevin, thank you for joining us today. Tell us a little bit about yourself and tell us about the firm.
Well, thanks for having me on, James. I'm the director for business development at Willis here, based in the Dallas office. I made the pivot to this role a couple of years ago after about an eight and a half year career practicing law. I really liked building relationships and solving people's problems, and I also liked negotiating agreements, and using my skills with words to look out for folks' interests. And I found that this was just a better vehicle for that than practicing law. So it's been great. I relocated from Atlanta, where I grew up, to Dallas. Went to school in Austin, so I had some roots here. My family's all here. Had a lot of relationships here that have become insurance clients, were legal clients. Yeah, so that's sort of my background. Willis is one of the largest global insurance brokerages in the world. I mean, we do all sorts of things. After working in a large law firm, I wanted to go to a large insurance brokerage. I've really had the pleasure of never having to tell a client or prospect, no, we don't do that. If it's an insurable risk, we can do it. I specialize in sponsor coverage, not geographically constrained. So working with sponsors, clients all over the country. That includes primarily private equity funds, but also we're seeing a lot more activity in the independent sponsor space. We're seeing a decent amount of corporate carve out groups or family offices kind of sprouting up, oftentimes from big exits as the seller in a private equity transaction. So it's great to be able to marshal forward. We've got 50 some odd thousand employees, publicly traded company. We've got experts in every sort of industry category. So, if you come to me and say, hey, I'd like to buy a rug manufacturer in Turkey, like, well, we have a guy that probably just did insurance diligence around that kind of transaction, right? That's of course random, but that just shows, I think, how deep the specialization goes.
Yes, indeed. Excellent. We got a lot of breadth and a lot of depth. So I think we're going to have quite a bit of insights here today. So let's get right into it. Let's talk deal flow. What is the deal flow looking like in your world? Is it increasing, decreasing? Is it kind of flat? What are you seeing?
I'd say, in the last 6 months, it's up and to the right. We didn't see an explosion at the year end of deals closing, and we didn't have political or tax reasons sort of incentivizing, oh, we've got to close this deal by the end of the year. And we get a lot of referrals from investment bankers, love working with investment bankers. They obviously had incentives to close deals, but kind of the rest of the folks on the team were not in a huge hurry. I'll say, what I've seen is that it's very competitive, right? So there's plenty of deals getting done. The cream rises to the top on all fronts, right? So the seller, the best buyers and the best sellers are busy. And the best companies are going for premium prices. And it's a highly competitive process. It's not what it was 2019 to 22 in terms of flow, but it's healthy and it's growing. We like it's changing. We see a lot more add-ons, right? I think our sponsor clients are holding on to businesses a little bit longer, which means there's more time to buy add-ons for platforms. So that's obviously very busy. We've seen a fair amount of continuation vehicles and other strategies being implemented, and we're seeing a new fund every day. We're seeing people spin out of existing private equity funds and go set up an independent sponsor or a funded sponsor. So yeah, I mean, things are very steady. I think everybody's kind of waiting for the other shoe to drop, right? There's all this dry powder in the market. Eventually, I think that powder is going to have to get deployed or returned, right? So it'll probably get even more competitive, but we're going to see a lot of activity.
Yeah, I'm curious what on that point about holding or not entering more platforms and folks are doing more add-ons. What do you think is driving that? Is that strategic or is that just trying to hold out for something?
I think it's always strategic. I think it's a tough marketplace, right? So, I mean, it depends. If you have, like I said, a rocket ship asset, there's no time like the present to sell. I think you've got interest rate. There's been a lot of uncertainty, right? So just in the what we'll call it the global political economic landscape, right? So you have interest rates and uncertainty around, are they going to drop? Are they not? And by the
Mhm.
way, if I, Kevin Langley, could predict any of these things, I wouldn't be on this podcast with you. I'd be on like a beach somewhere, James. No,
Yeah,
but
cool.
yeah, so it's yeah. I mean, you've got war, sanctions, just tariffs. I mean, I think a lot of things have calmed down, and people are comfortable with a sort of a new normal around chaos, but it still makes it a little bit tough for certainty. And that's where I think the partnering with us, and when I made the pivot to insurance, like being at a large broker that sort of has all these tools at our disposal, we can drive certainty and reduce risk around a transaction. I mean, that's the whole point of insurance, is to make it easier for people to do business. And everything's getting more expensive, so insurance is getting more expensive, and it's more important to work with a consultant that's really adding value rather than just your golfing buddy. But I do like to play golf, but you know, we do both here at Willis. Yeah.
Exactly. No, I love it. I'm playing this weekend myself, so I
Nice.
hear you on that one. So, what about deal structure? What kind of structures are you seeing most frequently here recently?
Yeah, it's a lot more of the same, right? So, we like lower middle market is pretty frothy. I would say that's the busiest part of the market. And in that space, it's if it's a competitive banker backed sort of process, the seller's setting the terms of the structure. And there's usually an attractive deal from the seller standpoint together with perhaps an earnout, which lawyers and people that are in the risk space and banks don't love earnouts, but you see a lot of that going on. So like I said, the good stuff is flying off the shelf, if you will. When it's time to just start getting returning capital to LPs, like I said, we've seen a number of continuation vehicles and other strategies to try to, and secondaries as well, to and oftentimes funds will get rep and warranty insurance or something, even on a secondary or a continuation vehicle. So there's an opportunity for us to add value in all these kind of nuanced transactions. Yeah, I mean, in the frothiest part of the market, it is just kind of typical leverage buyout, say sub $200 million. And there's usually an independent sponsor involved where they source the deal, or they're just everywhere these days.
Let's shift a little bit toward industries and sectors. What industries are you seeing as most active right now?
Yep. So I mean, I guess the headline is SaaS has taken a hit after a long steady run there. I think AI, as we all know, is a concern. So the reverse answer to that question is like AI proof businesses are still hot. So you think blue collar services businesses, HVAC, roofing, another category, med spa, right? And connected to AI, we're seeing sort of proliferation of data center work, right? Funds investing in data centers and data center companies, and we do a lot of that at Willis. But yeah, I mean the things that you can touch, hold, like manufacturing, things that are less risky from an AI standpoint, I think continue to remain hot. There's obviously plenty of SaaS businesses that also remain hot, but I think it's more and more important that they have some sort of AI moat, or that they truly are an AI company.
Yeah.
So they're exploding along with the proliferation of AI.
Is that shift, or rather, it's like a, a takeover at this point of a around AI, is that impacting those blue collar businesses in a material way, do you think?
I mean, in the sense that it's sort of impacting us all, right? But if you're not using AI in your business, you're falling behind, like sort of regardless of what you're doing right now, or not at least exploring ways to optimize your business. Like I think a lot of back office functions for business, blue collar businesses can be vastly improved by AI. I know from sitting in LP meetings with private equity funds, question one is usually, what are you guys doing with AI? Right. So it's everywhere. I do think that those are, the quote unquote AI proof businesses right now are maybe the least impacted, but it's definitely a mistake for them to not be considering how to use AI. And as soon as they're sponsor backed, I know the sponsors looking to implement AI tools across the board to try to drive value for their investors.
Yeah, for sure. So you kind of touched on this a little bit earlier. There's been a myriad of these, but what sort of economic forces are impacting deals and how?
Right. Yeah, I mean, you've got sort of as I mentioned, the interest rates all looming in the air. Kevin Langley's forecast is that they're probably not going down, right? I mean, we were at a historic low. They're still low. I think they were having historically low interest rates was extremely responsible for the historic inflation we experienced. But obviously,
Yeah,
COVID-19 was a weird time for us all. We're glad to, even though we're doing a video conference now, right? It's great that that's not how we live in 2026. But I think we're still experiencing the long COVID effects there, right? With interest rates and that hanging over folks. Again, I think our manufacturing clients, most of them have gotten past sort of the tariff issue, but that remains a concern. And then, you can't live in Texas and operate in Texas without energy being a part of, your investor's portfolio. So the massive fluctuation in energy prices with conflicts in the Middle East, et cetera, has impacted things as well. I mean, I had a deal that just went off the table because the price of energy, was so volatile that it just wasn't the right time to transact.
yeah, yeah. A lot of things happening in 2026 and in the previous year for sure. And we've just barely entered Q2,
Right.
which swings right to my last question for you. And this is where we're going to read the tea leaves a little bit. What do you see coming next for the M&A community and business as a whole?
Yeah, I mean, I think it's, and I love capitalism, so I don't mean this critically, but it's competitive, right? And the cream is going to continue to rise to the top. So our sponsor clients that are providing, exceptional returns to their LPs are going to continue to be able to transact, whether that's through a raised fund or as an independent sponsor. And there's going to be even more concentration of sort of winners and losers as the case tends to be in our system, right? So you do have a lot of funds with dry powder, and I think that's going to get deployed. You have a lot of funds that have been holding assets for longer periods of time than probably was originally intended. So I think we're going to see an uptick in the upper market where you're going to have, private equity funds selling to larger private equity funds or strategics. And we'll see an increase there just from assets that have been held for more than 5 to 7 years. So you know, um, I think we're in for, in our industry, a busy period ahead, but I don't think it's going to be like it was again from 19 to 22. I mean, people spend a lot more time diligencing projects now, and again, working with, you know, true consultants that have expertise in an industry is just more important than ever. And that's across the board from accounting to law to insurance. So really, really glad to be able to partner with our clients in a meaningful way rather than just thanks for the insurance contract.
Yeah, I love it. I agree wholeheartedly. Use your advisors. Kevin, I appreciate your time and your insights. Those of you watching, I hope that you find it as useful as I do. If you want to find more episodes and insights from the Dealmaker series, follow on YouTube or follow me on LinkedIn. Kevin Langley, thank you, sir.
Thanks, James.